We are live. Ken, how are you?
Good afternoon. Fantastic. How about yourself?
I'm doing awesome. Happy New Year.
To everybody out there, for sure. Speaking of the new
It's-
year, it's the new question, right?
What's that?
Just what we're going to talk about. My
Well,
goodness,
yeah.
it's a steady stream of that. That and the old Federal Reserve seems to be the hot topic and at the top of everybody's question list that we've been talking to.
You always say January 1st, the switch gets hit and the phones start lighting up. No different this year, correct?
Spot on. It was a nice, calm, quiet holiday season, to say the least. And boy, Monday, January 3rd, more activity, more, I would say, conviction or earnest behind the calls of the people that were calling. It's like, hey, this is on my to-do list. Let's start making some headway. Totally different feel.
Well, we don't have a ton of well, let's talk about the big changes. So last 45 days, mortgage rates, 30-year rates up from, we'll call it 2.8, 2.9 to 3.5, 3.6 in that range in 45 days. That's a pretty quick jump. What happened? How did we get to that spot where they leaped that much that quickly?
I think the underwriting theme behind all of that is the Federal Reserve is starting to spread information that it is actually time for them to start messing with interest rates and move them up. And the key driver behind all of that is just inflation. You know, the stuff that we see, whether it's groceries, gasoline, everything is costing more. And that has caused the Federal Reserve to change the tone of what they've been saying to have a lot more conviction that says we're going to take action.
So they came out and they said, we might hike rates 3 times in 2022.
Yes.
As soon as they did that, the market is building in those rate hikes. So that's really what's going on is I believe that let's talk about quarter 1. So we're halfway through January. Let's get to the end of March, kind of when the spring buying season kicks off for most of the country. In Arizona and Florida, it's already kicked off. But what are rates going to do now if we're at 3.5, 3.6 for the rest of this quarter? What do you see happening?
So what I think happened is, you know, all of the economists that we follow, we'll call it Fannie Mae's economists, the Mortgage Bankers Association economists, 2-3 months ago, when they outlined what they thought interest rates would do throughout the course of the year, would be to get somewhere in the 3.5 to 3.75 range by the end of the year. And I think what happened is all of that stuff out into the future just got brought current. So I think this is the new norm for the next 30 to 60 days until something else changes the market. So I think what we did is we just pulled those rates ahead. And I think this is the new normal. Don't expect things to change much on the upside. It's just we got here quick and swift as opposed to slow and gradual.
Do we have a chance for them to move back to low 3s, upper 2s?
There's a lot of talk about that, right? So everything that brought those higher rates so fast and so swift is everything to do with inflation. And the Federal Reserve, all of this stuff, we're trying to figure out if this inflation stuff is just supply chain driven or it's the real deal. So there's a school of thought out there that says this is brought forward. And once that inflation number calms down a little bit, that we may see back in the 3.25% range or slightly lower at some point the second half of the year. So there's some optimism there.
Okay, so mortgage market consists of refinance and purchase. Refinance has dominated that for the better part of 2 years now. It's still 60% of all transactions being done right now with mortgages. We have a ton of cash buying still happening. Let's transition and take this, we'll call it 3.5% interest rate that we see today. What is that? How is that affecting the buyers we're speaking with that who were pre-approved at 2.9, 3%? Well, what's going on in their head?
It certainly is there, but it's not a major affordability difference. So the conversation with folks buying a home is still heavily weighted on, do I have a chance to win? The anxiety about the offer process and trying to win, that still has a vast majority of the brain space for people looking to buy a home. Just kind of quick math, $400,000 mortgage, if we go up 1/8%, or excuse me, I'm sorry, 0.5% in interest rate, we're looking at like an $85-90 payment difference. So
A month.
That obviously nobody wants to pay that if you don't have to, but that's not a big driver or a quality of life difference when you're looking at buying a home that's 450 or 500,000 bucks.
Totally makes sense. You said something in there that I really want to talk more about, is trying to get my offer accepted is what's on the brain of the folks that are pre-approved, or the folks that are pre-approved and in the process of making offers. So we had somebody this week that was making their first offer, and it's pretty tough and their first offer was over list price. How are you describing that? How do you keep them excited about what it is that they're embarking on when probably there's a 9 out of 10 chance that first offer is just not there's no chance it's gonna get accepted? How are you dealing with that part of it? Excited and enthusiastic to buy a new home versus I'm depressed and I'm not sure.
Little sand
worried
thrown
I'm
in your
overpaying.
face.
Yeah.
Right. The conversation tone has shifted a lot. Now we're asking, it's like, okay, when we're starting this, what's your anxiety? Like, whenever you call a mortgage person, it's not like you're going to a birthday party, right? That conversation has a little bit of anxiety in it. It's like, okay, what are you feeling? And it shifted from, I just want to understand what my options to buy and understanding the game, and we'd have to educate them on this competitive marketplace. And now that shifted to, all right, most people get it, that it's super competitive. So what we're talking to folks a lot about is we have to really make sure that we're paying attention and quantifying the value and how your net worth can grow as a result of home ownership, and keep that front and center in your thought process, because that's about the only thing that feels like it's going to go your way when you get into the middle of this process. Meaning that, hey, I found a house, I'm excited. Oh no, there's 3 other people competing. Well, I was going to try to negotiate. Well, now I got to go list price or higher. And well, other people did that too. Now I may have to consider providing some form of an appraisal gap guarantee. And I'd really like a home warranty. Well, I can't get that now either. So all of those things can sort of have they can whittle away at the excitement a little bit. So we're just going to the part that says the value of home ownership, compared to renting. Rents are going up. You don't have long-term roots that you can sink into a rental property. So let's make sure that we're comparing the expense of home ownership to rental, the benefit there. And everything that we see, we're probably not going to see 15 to 18% appreciation this year, but gosh darn it, it's probably going to be close to 10, right?
I'll split the different 7.5, 5 to 10, somewhere in there.
Let's just use 5 as an example to do the math. Meaning you buy a home for $400,000. 1 year later, that's $420,000. You've paid your mortgage balance down by $7,000. So at the end of a year, your net worth as an individual is increased $27,000. And comparing that to your rent expense, it's similar.
All right, you touched on something there too that I want you to elaborate a little bit more on. So renters, move uppers, second homers. I'm going to leave second homers. I'm going to leave all the cash people out. Let's just talk about folks who are renting and need to buy, and folks that are current homeowners, but they need to move up because they've run out of space for their family that's increasing, or they want to get into that school district. So when you're talking to the renters, you talked a little bit about the additional $7,000 going to principal. How are you comparing current rent price versus current principal and interest payment on that new mortgage to help that current renter understand what's happening? You just explain that to our audience real quick.
Great point. This was a conversation that was just last week, but a person was paying $1,500 a month in rent. And the new house payment that we were looking at was going to be $2,100. Now, what I did is said, all right, in that $2,100 though, there's $500 of that per month that's going toward paying down debt. So if we take that off, really the cost of ownership between your interest expense, your insurance, and taxes, that's $1,600, and you're paying $1,500 a month in rent. So if you're looking at just a cost basis, this new home's only $100 a month more. Now, cash flow, you're going to take an extra $500 or another $500, and that's going to go from your checking account to equity. So there is a cash flow.
You're saving it. You're putting it off
Yeah,
the sideline.
It's a transfer, just like clicking it, swiping it from checking to savings. We're going checking to equity. But if you do a nerd balance sheet that says, what's my household net worth? It's not an expense. You're just moving it over to a different column. That was super helpful for them to go, you know what, I hadn't thought of it that way. Yes, I do have to fork out more money each month that comes out of the checking, but most, if not all of that, is going to equity compared to my current expenses.
So the move uppers, they know this, they're experiencing this live right now. Let's say they bought a home 2, 3, 4, 5 years ago, and they're sitting on the appreciation, and then they're sitting on the savings, what they've chucked in to pay the principal down. And this is really what's allowing them just the opportunity to explore these different options now. They have options because that equity is indeed cash. They can access it to use for a down payment on a new home, or maybe they want to downsize and not have a mortgage at all. But we got a bunch of different options. But the person that's renting, or they're living at home and paying rent or not paying rent, there's a little bit of a payment shock that comes into play for them. And what you're doing is helping them understand all the different ways that it works, so you don't get inside your own brain.
Yeah,
inside your own
a lot
head.
of the stuff that we're doing, we're talking to people that are, yes, we love talking to people that buy a house in the next 2 to 3 weeks, right? But a lot of this stuff is planning, and when we go through that stuff, that's why the budget is so important, because as they're saving to get ready for that new home purchase, whatever they're putting away in saving, that's a good indicator to know what they can afford to pay per month. Meaning, hey, if you're sliding $1,500 a month into savings for this new home purchase, and you're still knocking down and don't have any other debt that you've accumulated, man, that's simple math. That means I can step into home ownership and make a $1,500 payment, and it's straightforward. So we spend time, the budget's important to make sure you're saving as much as you can, but it's also a great indicator on what you can really afford with that home purchase when it takes place.
So folks out there that are watching, please share our information or this group. You can invite others to the group. We want to bring them in to continue to build this tribe of people who are looking to, grow their wealth through home ownership, as well as a bunch of the other things that we speak about. But we want you to understand that if you call 9 out of 10 mortgage loan originators right now, you're not going to get this level of experience, this level of examples, the amount of people that we get to speak to daily. We've closed over 400 loans the last 2 years, in 2020 and 2021. So we just are blessed to have wonderful clients like you guys that are watching to help us get through this so we can help as many people as possible, and so they can get good sound advice. We don't care if they buy a home tomorrow or 24, 36 months from now. That's not the point. The point right now is you need confidence and you need patience. So if we can help give you some of that confidence, we're going to be patient. As long as you're patient, you're going to be okay and you're going to get to where it is that you need to go. But right now, we're seeing people not confident, meaning they're not getting all of the facts that they need to make these offers in the first place. We're sometimes getting round twos, right? They've talked to somebody else.
Yes.
And then they find their way to us because they're not sure they got a fair shake in that conversation they had with loan originator, letter A.
For sure. Yeah, and we've also gone to maybe trying to make this an easier conversation. A lot of times we're saying, all right, let's get an idea of what you've got going on. Let's go right to the worksheet. We don't need to get your documents or do credit checks or any of that stuff. Let's just satisfy your curiosity on what some general numbers and qualifications look like. If that piques your interest, and then we want to proceed to doing a soft credit pull and get your stuff to validate it, well, then so be it. But it's super important to get that curiosity out of the way for people to get something so that they can start
They
making
build the
progress.
confidence.
Yeah, oh,
Yep.
totally. Without feeling like it's a bigger project than it needs to be.
This is no different than going to the gym and being disciplined in training and getting a little bit stronger each day. Your kids have played sports, gaining confidence in playing sports. This housing market requires some confidence and somebody to help you, so you're not going crazy through it, because it is a doozy, guys. We're not going to lie about that. It's a doozy.
Yeah, it's certainly far from easy. Hardest period of time that I can think of in the 25 years we've been doing it. It is the hardest time to get to purchase a home. It does not mean it's impossible, but everything you just said, it's required now. You have to prepare, you have to understand it, and you have to have your confidence ready. Otherwise, it'll spit you out pretty quickly.
All right, let's close on this. This will be a good spot to end. We might spend a couple minutes here. Let's talk about the inventory, where we are middle of January versus maybe where we were the last 6 months. Any changes? What do you see for the next few months for the spring market?
Anything I haven't been able to find any concrete numbers to support this, but the people that we're speaking with, they're getting a chance to get out and see homes, and they're getting a chance to get offers accepted or offers presented and some accepted at a pace that it's quicker than it was the fourth quarter of last year. So, in conversations with some of our realtor partners, it's like, hey, from a buyer side, we're down to 3 or 4 people you're competing with instead of 8 to 10. So there's optimism that there may be some easing from the buyer's perspective of having a chance. It doesn't negate any of the stuff we just talked about it's still hard. It's just going to be a little bit easier.
Now, do you see that changing anytime into March, April, inventory wise? You think it'll remain in this 3 to 4 offers on each home, or?
I think so, just because, if we look at what the economists are thinking about with regard to the rate of appreciation, that is directly tied to what the supply and what the demand will be. So throughout the course of the year, we believe that demand to buy a new home is still going to exceed the supply, the homes available. It's just going to come, instead of being totally lopsided, we're just going to come into check a little bit more. So
Perfect.
it's not going to be easy to walk out and say, I can go take 3 or 4 days to make a decision, but I think there's going to be more cracks at it.
I mean, is it easy to find a 20% return on any investment like we did last year in housing? No. So sometimes everything has to align, and it did last year for homeowners, correct?
It did.
Okay, so we don't necessarily believe that's going to happen again, but we're worried about the folks that are renting or that need to get the larger home for their growing family. These folks need to really lock in, figure out what it is that they want to do, and then talk to a professional to help them work through this. That's what you need to do to get on to the next step and get your move made. And then
The other thing that we're having that's come up a lot recently, right, is we're talking about you have to maintain that the goal in mind, which is home ownership, and remember that there's some benefits there financially. But when people are lamenting over the offer, and whether it's they're close 2 to 5 grand, and the thing that we're also saying is, like, in this equation, we have to take into account your quality of life, your time, and keep that in mind when you're going at these offers and trying to put some self-imposed limit. Again, if you're within a couple $1,000, if you're buying a $500,000 home or $300,000 home, $2,000 or $3,000 to be done to keep moving, is that a big deal in the grand scheme of things? So it's just kind of that holistic approach.
They need to hear that. Got to hear it. Like, if you could spend 5 grand more to know that you won, you'd be done.
Be done.
Yeah, I don't want to spend 3 to 4 more weeks looking at 30 more homes, going through them, and that arduous process. So those are good, huge. All these nuggets are good for folks that are in the middle of this. Guys, please reach out, questions. We'd love to help. We really appreciate all the support. We're getting a ton of great feedback. Thank you, Ken. Awesome information.
Always good to chat, man.
All right, we'll talk to you guys soon. Bye, guys.